In case you're wondering, I'm shooting from Tokyo these next couple weeks. Back in the real world, it is a mixed bag. The bad news is we got yet another World War III. The good news is stocks are soaring. This, of course, strikes many people as odd, as it should. Why is catastrophe so good for stocks? And the answer is simple: Jerome's money printers. A few days ago, I walked through some possible scenarios for markets after the attacks on Israel, using what happened our last surprise war when Mr. Putin invaded Ukraine, along with what happened last time we had raging inflation and widespread war in the Middle East in the 1970s. I noted in both cases that stocks crashed, oil soared, and both gold and the dollar went up as money fled to safety. So here we are 10 days after the attack, and so far most of that did happen. Gold is up 6%, which is quite a bit. Oil is up 7%, and the dollar is up, albeit a measly 0.5%. The one that very much did not happen is stocks. In fact, they went up a lot. 600 points on the Dow and almost 100 on the S&P, so that's good for roughly 2%, which is quite a bit for just over a week. That's about a 91% gain annualized. So why did stocks buck the trend? And the answer is simple: the Federal Reserve. The Monday after the attacks, stocks initially plunged in the morning, but then they saw the light from St. Jerome with what Barron's magazine called, quote, dovish rumblings by Fed officials Logan and Jefferson, who dutifully marched out to announce that after deep and careful thought, the Federal Reserve has now realized that perhaps rates can be lower after all. So there are two lessons from this. First, the entire global economy is the Fed's plaything. War, pestilence, alien invasion, it all falls to the mighty money printer that, of course, eats your life savings. Second, this explains why the Fed, in fact, why Washington, so bravely soldiers on through swinging scimitars, snapping crocodiles, fire-breathing dragons, because it knows that it can shoot untold trillions of your life savings at any crisis that comes along. Yes, even the crises the Fed creates, like, say, raining down $6 trillion to buy totalitarian lockdowns, immediately followed by the tightest strangle in 50 years that sucker punched a banking system that had gored like fat leeches upon the cheap money. So all of it, the wars, the lockdowns, the gorged leeches, bowed to the continent-sized counterfeiting machine we lovingly call the Federal Reserve balance sheet, which at the moment stands ready to flood Earth with that true opiate of the masses, paper money. Every crisis converted into inflation, lovingly sugar-coated and greedy grocers, grabby workers, Mr. Putin's wars, until the masses settle down and open wide for the next dose. Now, all of this runs on your money, naturally, diluting your life savings from the rich stew when you earned it into a thin gruel that hopefully keeps you alive in your twilight years. So what is next? Brought to you by Unchained. The Fed, as always, is playing with fire. By neutralizing each crisis, tranquilizing the public into thinking all of it is free, the Fed is setting up yet more inflation, which, given past form, it will crush the productive economy to fight, since the Fed will always choose rate hikes over federal spending cuts. As for the Middle East, everything depends how wide the conflict spreads. But far beyond the Middle East, expect an endless parade of crises, all of them financed by your life savings courtesy of the Federal Reserve. Okay, we'll be watching. See you next time.